Good evening, everybody. Welcome for another episode of Market Watch. Rise up. Market Watch. Wait for it. There it is. Always love to listen for that little beep. Good evening, everybody. It is the evening of August 18th. The market took a dip, and then the market kind of recovered a little bit, but it still ended up down on the day, or still ended up a little bit down on the day. Bitcoin had a little bit of a recovery, but a lot of panic in the streets. We're going to hopefully pull up a few charts and set the table for the conversation tonight. Take a look at Bitcoin first, go over some headline news, some macro stuff that we're keeping our eyes on. We have Jerome Powell having a speech on Friday at Jackson Hole. Last time he did that last year, he did the opposite of what the market was hoping. He does that this time, it means that he'll say, hey, rate cuts in September are not happening because the Fed is still expecting rate cuts in September. So hopefully Jerome Powell cuts rates because it'd be nice to keep this pump going, selfishly, of course. Other than that, we'll take some time to take some suggestions from the audience, both on TikTok and on YouTube and Twitter and Facebook and LinkedIn and Twitch and all the places that we're streaming. But looking forward to having a conversation with all of you tonight as we try to make sure we increase our education and awareness of what's happening in the markets this week. Doug, how you doing?
I am fantastic. How are you?
I'm good, dude. I'm good. I'm finally back home after 2 weeks of being on the road. And last week I was able to do Market Watch because I just had basically a layover in Boston before then grabbing a flight and flying down to Maryland. So it is nice to be home, back in my own dojo for at least a month before I fly again, and then fly again, and then fly again, and then fly again. And then it's Christmas, and then it's New Year's, and then I fly again. So,
Now I remember why I'm not in sales anymore. Just can't. Do you like traveling? Do you like it?
None of that is for sales.
Really?
No, that's all just personal.
Look at this guy.
Every single bit of that is personal.
Well, then hell yeah.
Yeah. My clients are all in the Northeast, so I can get to them on the train. I can get to them. I grab a car because I don't own a car. I haven't owned a car for 9 years, and I hope to never own one again. Is it because I am a green freak and I love renewable energy and stuff? No, that stuff is cool and all that. Taking care of the earth is nice, but I live in Boston. Why the hell would I have a car? Public transportation here is actually pretty solid, and it saves me a lot of money, so I do that. But yeah, dude, my clients are all close, man.
Well, that's sweet. I don't know. Maybe I gotta get that job. I miss the sales. I like the sales. I like the interaction. There's a little different layer of stress, but it's there's obviously the upside too. But I always had to travel, so that's the localized part makes sense to me.
Yeah. Oh, I had a question. Moist Mike goes, wait, you were in Maryland in my neck of the water cooler? I was Moist Mike, although I didn't know you were in Maryland. You'll be glad to know I had my first true Maryland crab bake, Maryland crab bake. Maryland crab bake.
Yeah.
And then I like crab. It's better than lobster. And also I had my first snowball with people in Maryland in the mid-Atlantic. They'll take basically what is an icy, which is just flavored sugary ice, and then pour melted marshmallow on top of it. And they call it a dessert. I call it a monstrosity. That does taste delicious, but it's a lot of sugar. Had my first one of those. But
spoiled being in North Jersey and New York. I'm spoiled. Everything. I mean, you are too. I'm just there, but no shade to Maryland. No shade to Maryland.
Mm-hmm.
Have some good times down there.
We have our local
secrets and throwback. Anyway, let's pass on from that.
Yeah. But anyway, guys. So let's first talk about kind of the macro scene, and then we'll take a look at Bitcoin. So the most important macro event right now. And Doug, let me know if you disagree. Prospect of rate cuts happening in September and rate cuts happening afterwards. Is there anything that you think is more important of a single event that is potentially driving the market rate?
The mini events of the data leading up to that is it, but that is the event, correct. There's nothing else.
Anything is important that affects that. So inflation data, important. Last week was important, but PPI inflation, which came in hot, is the least important of the three types of inflation, PPI, CPI, and PCE being the most important because the Fed cares the most about that. labor market would affect it. The bond market would affect it because these are all things that the Fed cares about. So anything that affects those things would affect the likelihood of getting rate cuts. Yeah.
So that's it. That's the event. That's it. What we got? Is this September 15th, 13th, somewhere there, right?
17th. September 17th is when the Fed has the next meeting.
Okay.
And so we have Jerome Powell having a speech this Friday from Jackson Hole, where he'll give some level of explanation as to what the Fed is thinking when it comes to their view of the economy, which is going to be interesting because of the latest inflation figures. We'll see what happens.
Dude, what do you think he does? What do you think what is his prep? How much of the work does he do versus how much of it is I'm interpreting or I'm taking on, hey, half the guys saying this, gal saying that. What's the process? I'm very curious. I
like to imagine, I know it's more than this. I like to imagine that it is just like how South Park depicted it, which is they literally just have a pentagram in the middle and they cut off a chicken's head and just let it run, and where the body falls, they then make a decision. But they probably have some super version of ChatGPT that makes all the decisions. They just run the data through and then read the answer out. Honestly, probably it.
That sounds about right. That's it. Yeah, that's the boring path. But we'll assume it's the former.
Mm-hmm. I prefer the chicken example.
Yeah.
And then Web3 Glossary came in with something else that I was also going to mention. But Web3 Glossary over on TikTok says, how do you guys factor in things like potential global conflict de-escalation? Those of you who are unaware, Trump and Putin met in Alaska on like 3 days ago, right? And
yesterday? 2 days.
Yesterday. I was in Maryland for it. So it was like 2 days ago, 3 days ago.
All right. I believe
and everyone was like, oh, wow. I saw a lot of people being like, I can't believe there wasn't a ceasefire, a peace deal agreed. I'm just like, guys, like, Ukraine wasn't involved. Like, Europe wasn't like, this is going to be a multiple conversation type of thing. But anyway, the news ran with it the way the news is going to run with it. So they met. We don't know what they talked about. And then today, Zelensky and various European leaders were in DC meeting with Trump and having a conversation there to talk about what could actually become a potential peace deal between Russia and Ukraine. And I made a video earlier today talking about how de-escalation of war or the escalation of war always creates short-term booms or busts in markets. Like short-term, it'd be a short-term reprieve or escalation of optimism to have peace in Europe. And then whatever that overarching macro trend is would reclaim the market. And that is rate cuts for us right now. That is U.S. unemployment on the rise a little bit, which actually helps improve the odds of rate cuts and all of that jazz, right? So it would be a momentary boost of optimism in the market if a peace deal is announced between Ukraine and Russia. But then it would just be that short term. Then whatever else is happening for the more important stuff, just from an economic standpoint, would then reclaim the market. Doug, do you have any other thoughts on that?
So on no, you covered all the key points there. On an unserious note, I've been in the trenches, like it's very much in the trenches the last 2 weeks. And I learned the news through memes. So the amount of Zelensky suit memes that popped up midday, I was like, oh, okay, I learned about that. That's happening today. So that's how I get my news, is through the trenches.
Suit memes. I mean, hey, however you get your news, as long as you get it. Doesn't matter where you
go. By the way, it's so fast. It's sometimes just like, wow, it's actually sadly ahead of everything else is crypto memes, and take that for what it is.
I don't like that.
Yeah, no, I don't either. There's a lot of things I don't like about crypto right now. This whole the way crypto is evolving is not how I envisioned it back in 2020, 2021. Like mass adopt. This is we lost the plot a long time ago. But hey, we're here still. So.
Yeah, but hey, the plot will be underneath all of the memes and BlackRock's buying a bunch of it.
Correct.
It'll be there. It's still in the water. Other than that, I'm trying to think of macro things to think about. U.S. unemployment is on the rise. There's a bunch of, not that this directly impacts crypto, but it does impact markets overall in the U.S. as well, is that the housing market, there's more inventory on the market, so there are more sellers than buyers now for the first time, at the extent that is different for the first time in over a decade. So you might start to see home prices start to come down. Other than that, oh yeah, U.S. manufacturing has had a number of bad data releases as well. So U.S. manufacturing is hurting a little bit too, but that it could largely just be an immediate violent swing due to tariffs, and we still need to see just kind of how things level out.
So now it's also to the point where we start getting a lot of these interesting charts of like, hey, the one I was looking at this morning was FedEx stock price being a leading indicator of global trade, of being 3 months ahead, and FedEx has been on the decline. And you see there's a lot of experts, a lot of people pulling correlations together of this is what I think is going to happen next, because everyone's trying to be an expert to predict what's going to happen next, especially at these like inflection points, which I would call coming up is definitely one of those inflection points. So just be careful out there. I'm collecting them, and actually next week I do want to go over a couple because there's a lot with earnings. I think we're almost through earnings season, even though it's been somewhat quiet. I know a couple of things stuck out to me, but in general, nothing significant, eye-opening. I think the PPI piece and all that, again, maybe another quarter to really start seeing the impacts or not on specific sectors and their earnings.
Well, the other thing that's crazy too, and this is a really interesting note, is the stock market has become incredibly vulnerable because the amount of money in the stock market, again, the S&P 500, there are 500 companies, but the amount of all of the market cap of the S&P 500 that's just in the top 10 stocks is at an all-time high. And NVIDIA, I'm pretty sure, holds 8%. I'm gonna have to double check that, but I thought I saw the figure was 8% of all of the market cap of the S&P 500.
I have a perfect chart for that, but by the way, I need to give a shout out to X because there has been some features I do like. There has been improvement, but one thing that drives me crazy is you save your bookmarks in a folder. They're not in sequence. They don't save in order. You start scrolling down, looking at July 3rd, June 7th, May 28th. Oh, 13 hours ago. Like,
sick.
What? So I have a chart that shows exactly what you were describing, when you are accurate.
And it is over 8%. How about the next four? What's the top five? And can you read them out?
I don't have it. I'm saying this. I know in my head. I have Camp Jansen memory. I'll throw back there in my head of the picture of the chart.
Well, luckily, through the power of ChatGPT, how much of the total market cap of the entire S&P 500 are in the top 10 stocks?
I was thinking, by the way, future we may have I think we should get an intern on the show that is an AI, and we can summon the intern as needed for things like this.
I would much rather have a human intern, and then I can demand coffee at all times.
Okay.
Hot coffee, take a sip. It's lukewarm now, and then you throw the coffee at the intern who's unpaid.
Does that happen?
No, but it definitely did in the 50s, 60s.
Definitely, you're sure it did. Oh,
so let's see. Okay, the top 10. How much of the entire market cap of the S&P 500 do you think is in the top 10 stocks? Also, guys, let me know in the comment. Well, actually, let the comment section go first. Guys, again, how much of the entire market cap of the S&P 500 is just in the top 10 stocks? Because it's a lot. 75% says Averio Lopez. That's a good one.
I was seeing the S&P 473 being.
Says Alex. 70% says Joe. Adisa with honest answer, no idea. Aiden, 80%. Beep boop beep, 10%, 50%, 60%. Doug, how about yourself? What do you?
Which direction? Sorry, what perspective are we looking at it? Which way?
Top 10 stocks. How much of the total market cap of the entire S&P?
Oh man, I'm gonna don't clip this. 40%.
Dude, it's 40%.
Clip it.
It's roughly 40%.
Yeah.
In 10 stocks. And so just think, if there's one hiccup in one of those companies, the entire S&P 500 takes a huge dip. If there's a hiccup across 2 or 3 of those, you have a really, really, really big problem in stocks. And if you got a big problem in stocks, that bleeds right over into Bitcoin. Bitcoin has a tough time, that bleeds right into the altcoins even more as well. So the S&P 500 is becoming more and more and more and more vulnerable to a downturn if just one of those top 10 companies takes a decent sized hit. Particularly if it's Nvidia. It's not great.
See, and that is all coming from your expectation setting, right? So it's almost like, where's the point where it's like, hey, we're going to do this next quarter, where you don't actually do that, or we're going to do this next quarter, and they're like, well, that's not good enough, and that's something there, or you have something that's actually more of a catalyst of something that's underlying of the cover there of the good things that may pop up, but usually it's because of just missing expectations. So I'm very curious on that too, and expectation setting going to the fall here, because it's just an interesting time. Let's put it that way.
And Doug, before we move on to, I know you said that other market analysts were saying that taking a look at FedEx is a leading indicator for the economy and just kind of what could happen for the stocks. Can you explain why?
Oh, so I would just give an example of a random chart. That was from Apollo Management that has done. I'm sure now with the power of AI that everyone is trying to figure out what is every single scenario or chart or data set I can throw against each other to try to find some correlation and say, this is guidance now. All of a sudden, we've seen this in the past. It may repeat itself for fear mongering or not, but a lot of those charts are starting to pop up. So the one, at least from the Apollo piece on the FedEx, actually, I can pull it up if that's easy, just to show the picture. Would that be helpful? Let's do that. Let's go to the video tape.
Then after that, we do have a comment here over on YouTube that says, check the Russell 2000. It's quite similar to Ethereum or Total 3 in my opinion. So Smart Bull, oh, actually, no, sorry, you are on Twitter, not on YouTube. Smart Bull, we'll get to that next.
Oh, can I flip this to there? Does that work?
I got it up on the big screen. Can you get it over on the TikTok?
Yeah, I can do that.
Share.
You do. It's as good as it's going to get. It's fine.
It's good.
So this is your FedEx. There you go. FedEx stock price points to a sharp slowdown in global trade. So this is a historic chart. We're looking back 2001 is 25 years of history here. And all of the lines are somewhat a very similar color, especially on the TikTok view here. I'm sorry. Your dark navy blue is the FedEx stock price. And this turquoise line is world trade volume. I don't know what IHS is, but that's whatever the metric is. Regardless, what this is implying is that the FedEx stock price 3-month lead towards your lagging, I guess, of the world trade volume itself. So it's saying that this is usually an indicator of what's going to happen next. Now, if I look back at history here, let's go back to the key times. Let's say, I don't know, here's your Great Recession. Actually, it's here. See, this is hard because they're parallel and they both fall off a cliff here. Okay, fine. So it's
but is that because FedEx went down? No, it's because there was the 2008 Great Recession.
So I guess I want to look into this more to see the thesis on the back end of it. I'm kind of saying like, well, why now? Is it a gauge of, we could just say obviously FedEx ships things. I mean, that's a pretty straightforward thing. If that's guidance.
Things. If there's more global demand, there will be more shipping. If there's less, there will be less shipping, and therefore larger economy that's expanding, shrinking economy.
Correct. And on its simplest form, like I that makes sense, right? Like and I'm not saying this is not a valid point, but again, back to my initial comment that seeing charts like this are just going to become very frequent. And I see them all the time as I follow a lot of economists, which is good. It's good to have the perspective, but at the same time, yeah.
Do you think that FedEx chart becomes invalidated now because for the first time we have such a concentrated S&P 500 in tech stocks, specifically tech stocks who are not shipping a ton of things? A lot of what they make is by hosting, cloud networks. A lot of what they make is by selling software. A lot of what they make, granted, there are physical products, semiconductors get shipped. Amazon ships a ton of stuff, but they don't go through FedEx. They go through their own Amazon shipping services. So is this a time where that FedEx model to global trade finally disbands because we've never had such a concentrated S&P in tech stocks?
See, these are good questions, Will. This is called critical thinking. For those of you out there don't know what that is, this is critical thinking.
Thinking.
I actually see. I would like to go to think about that because it's it's where does the correlation make sense or not, or to say, hey, this may not be an indicator, and I want to take the other approach, and maybe this doesn't apply this time. But yeah, good question. I can think about it. I don't know.
Because like maybe, but also maybe it's just, I would also ask myself, like, is that my just hopium? Is that my hopium coming through? Because I want that chart to break, because I want the market to rally. So if FedEx goes down, am I just thinking that because it's what I want? That's where things become a little murky.
This is going to sound crazy. I don't care what the market does right now. It's almost like, so obviously I want it to go up. Let's be clear. I want it to go up, but it's almost like I am exhausted by the market. The last, what's this, 7 months this year, and even prior. I'm just like, just make the decision and make it clear, and then let's run with it. And I hope the decision clears, one more breakup. Let me ask you, what are your, if you had to put a prediction out there, what the rest of the year looks like in general, the macro, what do you think?
I think you have a peace deal at some point with Russia, Ukraine. That'll be a nice short-term boost of optimism. I think you have rate cuts start to happen again at some point this year, even if inflation remains at 3%, because I know unemployment is going up. We know that because the data is pointing to the U.S. labor market starting to weaken. But also, I work for some of the largest supply chain organizations in the world as a supply chain and logistics consultant. Think of a major manufacturer or CPG company or retailer. I work with them. And they are all firing people. Like, all of them are firing people, except for maybe 2. And so I know that by the end of this year, each one of them are firing multiple thousands of people worldwide. And it adds up. It's a lot. And that's just in CPG and manufacturing and retail. And it's particularly the CPG and retailers, because they have storefronts, all that kind of stuff. People that they can lay off more easily than others. So that's coming.
I don't believe unless I see the data. But also, I don't see the data. What's that?
Also, my company too. I don't believe unless I see the data. Also, my company too. They just fired our CEO like last week, and so you want to know what's going to happen? They're going to hire a new CEO in 2 months, and then they're going to fire a shit ton of people. This new CEO is going to come in and go, I got to make a name for myself. AI. Just going to fire a shit ton of people.
Gonna have a vision and a plan and never execute it. And the next person basically picks up right when they're probably towards the end of actually adopting it and going the rotation over and over again.
Yeah. But that's happening across tech companies as well.
Oh yeah, everywhere, all the time.
Cascading things. So unemployment gets worse. But if that happens, so your question, if that happens, I see rate cuts happening. Even if it's not September, 1 or 2 rate cuts I think are going to be happening this year. And then at the same time, in May of next year, Jerome Powell will be stepping down. You're going to have the new yes man from Trump, or maybe probably yes man from Trump, come in and do a crap ton of rate cuts. So I see global liquidity just on the rise and on the rise. So that's what I see happening essentially no matter what. And that's what I'm gearing up for.
How do you feel the market then? So the markets you feel are going, not to put numbers on, but just, do we end the year strong? Do you see a contraction prior, like a contraction,
It depends on when we get rate cuts, because if we get rate cuts on September 17th, I bet September kind of sucks, because you have to buy the rumors, sell the news. And September is also historically the worst month in crypto. Granted, the summer is also supposed to be bad for crypto, and it wasn't. So, maybe we can take this and throw it out the window, and all historical data points on how cycles work. I don't believe the cycle is really here anymore. I think the cycle is long gone and dead. It died when the ETF first came out, but it hasn't been 4 years since the halving. So, we'll see, or 3 years since the halving. So we'll see. Jury's still out on that. But what was I saying? Oh my God, I lost my train of thought.
The market for the remainder of the year.
Yeah, so I think September could be bad, because it's buy the rumor, sell the news if we get rate cuts then. And then also, if we don't get rate cuts in September, look for a huge dip in markets, because everyone will be super annoyed and disappointed. So I think September really does have a chance to not be very good for crypto. But I think that there's a potential opportunity, particularly with the daily candle close that we had in Bitcoin right now, that maybe the rest of August leading into rate cuts can still be solid. So that's what I think. What I think happens and what price points we're at by Thanksgiving or Christmas, I don't know and I don't care.
Got it. I like it. What
about you?
So before I answer that question, I do a shout out here to Chad. The Chad in the TikTok chat, bearish on why there isn't more people here listening. Literally free information and learning. Chad, I am sorry. I have judged all Chads in the past. I have now. You've leveled up. I appreciate that comment. We appreciate that. Look at that.
Yeah, a round of applause for Chad.
Yeah.
But actually, go ahead.
No, I was gonna give you my thoughts on the market.
What I wanted to do is because we had a question from Twitter. We talked about it earlier. Said check out the Russell 2000. It's quite similar to ETH or Total 3, in my opinion. I think that's actually a really interesting place to start. Since we start talking about the stock market, we'll use this before we head on over to Bitcoin. And for those of you who are more used to crypto, the Russell 2000 is like looking at altcoins, which is why Smart Bull is equating it as equivalent to Ethereum or Total 3, which essentially measures the altcoin market cap space. Because Russell 2000 are much smaller stocks as compared to the S&P 500, so they represent the more risk-on part of the stock market, just like how altcoins represent the more risk-on part of the cryptocurrency market. Doug, do you mind pulling up the Russell 2000 chart?
I could do that.
Because I haven't looked at the Russell 2000 chart in several months, and you are super fast with your initial read on markets. It takes me a little longer.
By the way, remind me if we have time before we're done here. I want to talk about your chart art or the chart art.
Yeah.
I have very much appreciation. I've been talking about chart art for 4 years now, and I'm excited that I actually see also Fair Value Gary also has done some chart art, and I appreciate that. I'm going to the Russell here. So the Russell I have over here is indexes RTY. So we got RTY here. Let's pull this down. Let's make us a little more clear for the TikTok folks. There we go. Okay. And then we'll split this, like that. And then we'll do, what was it, Total 3?
Yeah. Is the ticker for the Russell RTY?
That's one of the, so it's one of the, TradingView has like the, I want to call them normalized markets. It's like, it's a TradingView market, I think. Capital.com, I think it's like one of the, so I just use the RTY because I look for the charts that don't have gaps in them because I hate gaps, although I'm realizing that gaps do give some guidance.
The Russell 2000 looks like pricing and rate cuts.
These do look, as of right now in the short term, I could agree that these definitely do have some correlation. I've looked back further in the past.
I'm looking as far back as 2021 right now on mine. I'll share mine in a second, but I want to get your
big guy. It's probably the big guy here.
I'm a big guy. Everyone just bear our silence for a moment as we quietly chart something for the first time in our autism triggers.
There was a new word that's replaced autism. I just saw. That's like the it's red. I don't like that. I need to default this back to.
Is it a new word?
There we go. Yeah, it was
autism is offensive.
Yeah. Yeah. There was some. Yeah. It was a different word. Anyway, I digress. So. Yeah, I could. These look. I'm not gonna lie. At a glance, these both look pretty toppy. Like I'm not like if I just. I know we can't see the whole thing on TikTok. Here, I'll zoom over. Like just
what
this.
What time frame are you looking at? Oh,
the weekly chart.
Yeah.
Like this up here. Oh, that's a pretty nice bearish div on the Total 3. Russell actually looks better than Total 3. So I could say the Russell to me looks stronger than altcoins, just at a glance here without having looked at this before. Wow, I really don't like this. Looks. So now I want to chart Total 3. Total 3 I've been watching for a long time now in general, but like $1 trillion is the key level. I think we get this like that. That to me would be very bullish. Pull back into your 800 billion, the retest here is 900 billion, and then make the move over the trillion and then send it. That's why. So big quick segue back to just on my thoughts on the market. I think I want to manifest the next 4 or 5 weeks suck. They sideways go down and get rid of whatever needs to come out, and then let the the fuckery happen with when the rate cuts happen or not. what they will, and then give us an October, November, December, like we had the last 3 years, and have fun into New Year's, and then assume party's over, but be surprised if it's not over.
If the markets dip between now and rate cuts, the announcements on September 17th, it's because the market knows rate cuts won't be happening, and you'll have that pre-dip by smart money. But if we have a rally into it, then rate cuts will be happening, in my opinion.
That sounds, yeah.
So explain what you're seeing here on Russell. Pretty much what would it have to get above in order for you to be bullish on it? Because you say you're a little bit less bullish on Russell, or you said you were
less bullish on all. This looks stronger only because if I just quickly peek at the RSI, it's like not as like the total RSI looks more weak. Like it's almost like this is in line with this, where total it's a little more tilted up, where the strength is weakening. But regardless, we're at decision point. Let's put it that way. We are at decision time with the Russell too. And I have not looked at this chart in easily a couple months. This needs to very soon make a decision. Like this strength is really nice from the lows here, but this needs to push up here and then consolidate and then that. Otherwise, as of right now, I would have to assume this is going to reject here and then decide what to do or bounce and come back up. So just how markets have seen and we've been looking at, and if I really zoom in here, it looks like there was a sweep of the highs here that were from February. No,
November.
No, I mean these highs back here. These were not swept until right now. Oh, okay. Let's see here. This is right February 25th. This was the 13th. That was 5 days ago. This just swept the highs that were from back there. So in that case, meaning that if anyone was short up here, let's say they were stopped out, they had a stop loss, but it's just a target area for a market maker as a price objective to get back to where those highs were. And this is after that sell-off. Yeah.
That's an aggressive V-shaped recovery from that point.
Yeah. Which is crazy. This year's been crazy, by the way. I haven't been following markets as much as I have the last 2 years, but as in the past, prior, but just observing the things that have happened, especially, the beginning of the year from your January, it's just wild to me. So this is going to be interesting for continuation up. I would need to see this get above 2,300, 2,400 and stay up there, consolidate, get through whatever the rate cuts are, and then push up. Otherwise, I'd be looking. I think your ideal scenario is you get the pullback here, and then actually, I don't have a read. I don't have a read, Will. I don't want to speculate. I don't have a read.
Well, let me take a swing at it then.
My vibe charting, I don't got it. That's all I got. Let's go back to here. Let's see.
I'm going to share my screen real quick.
I got you. Yep.
Okay. Here we are. This is the weekly chart for the Russell. And what I want to point people's direction out to first, is we have a double top pattern here that started on November 2021 and then double topped December of last year. Since then, we had that fall and that V-shaped recovery up to sweep this consolidation zone, all of the things that Doug mentioned, right? So now we're at the Russell 2000 is coming up into the top line of resistance here that Doug also drew on his chart. But what I'm drawing here is this triangle, this wedge pattern. In my experience, you typically see a rejection when you come up and hit this line for the second time, which we've hit and had a little bit of a bearish correction here. But we have a pretty deep pocket between the 12, the 21, and the 55-week exponential moving averages that I would say, rate cuts really are going to happen, that would be anywhere between a 4% to a 7% fall in the Russell 2000, all of which in that area could provide what I always call a trampoline zone that could then bust up and upwards, good English, Will, up and upwards above this consolidation triangle. And then the breakout target of it would be, measure it from its thickest point, and let's just say the breakout happens here, that would put us into new all-time highs for the Russell 2000. That is exactly what I think will happen if rate cuts happen. What's the time frame on that? No clue. We're looking at the weekly time frame, and things don't move super quickly like this. like in crypto in the stock world. But that's what I would be looking at. What I'm seeing from an indicators, looking at the bottom of the screen here, is I see that the RSI on the weekly time frame is still neutral and is nowhere near overbought. At the same time, our Moxie indicator is about to flip long. It is so close to flipping long, and if we get a quick rejection here, it'll taper off again, but potentially swing back upwards. But it is right on the cusp of us getting a long signal on the Russell 2000. And granted, the long signal on the Moxie indicator doesn't have a perfect track record. As you can see right here, this was not a good time to long. However, this was a great time to long. This over here was a great time to long. I mean, you're looking at swings of 65% in the Russell 2000. You're looking at swings of 35% in the Russell 2000, right? Like these are massive swings for the stock market over a big period of time, but long signals on the Moxie can be great. But again, there's another example over here of it not being wonderful. So it's like a 60% accuracy, but that's something to add into our criteria. So, and the other thing that this V shape, this huge, super fast swing upwards here, it wouldn't be happening if rate cuts weren't suspected. If we weren't expecting a massive increase in global liquidity coming, you are seeing a resurgence since April in a risk on assets in the stock market, which is a nice thing to see because that is a feeling that hopefully goes over into altcoins. I'm going to stop sharing here.
I like it.
Yeah.
To get you, I want to get you one of followers a long time ago gave me this, one of the script, the Pine script. It puts the ticker in the top corner, which I didn't think was even possible. I'm like, yeah, sweet. See in the corner there. Wanted to address something. Someone in the chat here. James Random, there will be one more push to try for 150K, then it's over, be done by December. I very much agree with that.
If the 4-year cycle is right, that is exactly what would happen.
Well, then I take back my comment on the 4-year cycle is bullshit because I think it just naturally, I didn't even realize that's what it was. But to me, I think the 150 is definitely a psychological level. Like even if we're into the 140s, whenever that starts happening, like if you're euphoric, by the way, write this down somewhere. We're in 140, Bitcoin's popping, moving towards 150, whenever that is. If it's next week, if it's December, if it's March, in your mind, if you're euphoric, take profits on other things. We all are already in uncharted territory, but that is a whole different ballgame. And hell, it could go to 250, who knows? But at the same time, it's one of those things where you want to scale back, in my opinion, or at least have a plan prior and execute your plan. But that's the next psychological level. It's going to be happening at some point, whenever that is. Just be aware.
There's always a big sell-off at these psychological numbers. Totally agree with that. However, you're not going to have a 60 to 80% correction in Bitcoin.
Oh, no. Oh, I'm implying just this. It's a good time to take profits. Not saying that it's over, but
yeah. I mean, you're going to have I bet you have a 30% or 20. I think we have a 25 to 35% correction in Bitcoin. I think that's totally on the cards. And then you have folks like MicroStrategy come in and buy billions of dollars worth, and that's what stops Bitcoin from having its traditional slides back downwards.
And I would say too, you're on your note, 20-30%. One of the best traders, or let's say that I've followed for years. Shout out Cold-Blooded Chiller. He was always in an uptrending bullish market for all coins. Assume at any given point there could be a 30% pullback, and that's normal. 20-30%, like just that's okay. And we haven't actually seen that really yet since things have gotten really, really bullish. And you want it. You want to have these pullbacks because it's healthy. Otherwise, it can't just be up only forever, because the pullback's more painful and harder to recover in those scenarios. So,
absolutely. And guys, remember, if you're in profits and you go, when do I sell? Whenever you're in profits, like it doesn't matter if it's 10%, 15%, 20%. Guess what? If you got 20%, you're a top 1% trader in the stock market. It's fine. You can take that money and run away. You can make 15 to 20% trades a year, and you did phenomenally. As long as you're making money, guys, that's all that matters. You don't need to get rich in one. You don't need to hit a home run every single time or a grand slam. You just need to hit some singles and doubles. For people who are not an American audience and didn't understand baseball, that baseball reference, I apologize. Now, I have the Bitcoin chart up. This is the daily time frame. And we actually had a pretty nice end to our daily candle here. This is granted it's red, but this is a hammer candle. It has a long wick with the head of a hammer, and it's a pretty bullish recovery, this long wick here, especially coming off of the 55-day exponential moving average, this blue line. At the same time, we also have this being a traditional area of support for us on this wick here that we also pretty much bounced exactly off of. That also gave us a big hammer candle. This is a good sign of bullish recovery. Happening at the same time as the daily charts stochastic RSI is oversold. A decent sized candle, or not size, but a decent candle while we're oversold, even though we're not totally oversold. I'm personally still expecting consolidation into the side, because when we come to the weekly chart, we're still looking at a shooting star candle, which is when you have a long wick on top and then a body underneath. It kind of looks like an inverted hammer, which is also another candle, but not when you're at the top of the bull trend. It's called a shooting star. The sign of bearish momentum on the weekly time frame. It could see us come down and still touch $112,700. That's what I personally would look at first, looking at this. But us having the daily time frame give us a decent candle yesterday, technically today, gives me hope that maybe we can build a few more positive looking candles to start to reverse that and create a more bearish candle on the weekly chart today to negate the candle we had last week. We'll see what happens. A lot is going to be dependent on what happens Friday during Jerome Powell's speech from Jackson Hole. But we had a decent candle with some signs of positivity. And if we zoom in on the 4-hour time frame, we can see that we kind of almost got into oversold territory on the RSI. That's something that very rarely happens on the 4-hour time frame, but not exactly what we got close. But bearish momentum looks to be growing, unfortunately, on the 4-hour charts, Moxie indicator. So we'll see. We'll see. A good sign on the daily time frame doesn't outweigh bearish momentum that we see on the weekly time frame. So we need a few small wins on the daily chart to start to change what we're seeing on the weekly. And again, those areas of support. First up, $112,744. The next one, 107.7K as well as the next major areas of support, just looking at exponential moving averages. Doug, when you look at your Bitcoin chart, is there anything else you're seeing differently from that?
Would you believe me if I say I haven't looked at a Bitcoin chart in 4-5 days?
I would, because I've seen you just post tweets about Clippy's NFT price.
I crushed it. Clippy NFTs on the first move up. Yep.
Hell yeah.
I guess let's thank my degen days back in 2021 of understanding the dynamic of trends and when things move up and down. But it was I'm gonna give myself an A minus. It was perfectly executed. The reason not for the A plus is I didn't use anything that was able to actually execute the orders like in batches. I was doing them individually and that was slow. But yeah, so don't trade NFTs. NFTs are still dead. They're not great again. I don't know if they'll ever come back, but they will. So let's do that. Let's pull up Bitcoin. Let's do that. Mm-hmm. By the way, Clippy is one you gotta watch. FYI, Clippy's going to do things. Clippy is exposing the corporate greed of selling our data and using our data against us.
Isn't it just a meme coin?
No. It came from a guy on the Twitter, on the YouTube. It's got like 2.5 million followers. Everyone changed their profile picture to Clippy.
What's a movement? Sounds like it's a movement. It's
a movement.
It's still.
This gentleman has no idea. He's not care at all about crypto or anything about it. Like I don't think he's even recognized that its existence. He is anyway. I'm not trying to sell this meme coin. Anyway, let's move on.
I think you're trying to sell this meme coin.
What's that?
I think you're trying to sell this meme coin.
I'm actually not long the meme coin right now. But yes, I still have some PFPs because they're sweet. So, oh my goodness, actually, so at a glance here. All right, so I remember drawing this. Let's go back in time. This is the last time I drew this. Was right here. remember this. I remember this was what's this? Wednesday? It's about a week ago. Oh wow, it's the 7th. All right, it's been longer. I mean, I see the Bitcoin chart, but I'm not like processing it, right? So this was 117, very key level, downtrend from up here, which was July. This is a 6-hour chart. I don't know why 6 hours. It's like the view. It gives me the best picture.
Time frames.
It gives. Hold on. Here's 12-hour. Well, I guess 12-hour works too. 4-hour is a little too much information. 6-hour is. Hold on. 6-hour to me is the sweet spot for me.
Well,
right?
whatever floats your boat.
That's it. You say you're a chart artist. And you're. Hold on. All right. Okay. So
if I were to see here, I would see a pterodactyl shooting seeds at an alligator. That's what I would draw immediately right there.
So there's a thing about the chart art. There's rules about the chart art that don't exist. You can't. Now, if you see it, you see it, right? It's almost like you're not going about it trying to find something. It has to speak to you. It has to just jump out. Like I saw a bathtub the other day, like a Victorian bathtub, which is the one with the, around the top and the poles and that. I saw a Cybertruck the other day too. But yeah, these are patterns. Anyway, so this downtrend, right? And this key level 117. The goal is, hey, at this point, this was last week, can Bitcoin get up here and stay up here?
So get above 117?
Get above 117 or not? Or is it going to reject? Or the fake out up and then the down and then this, right? So we're going to let this play really quick. See this? And it goes up. So, okay, so we got up. Pause. All right, okay. Up, retest, beautiful, which was right here. I could even a little argue lower. Now this, to me, this was a little too strong, honestly, if I'm being honest. I would want this to continue to descend. And the fact now, oh, it did. There it goes. Oh, actually, okay, yeah, I'm going to short this. Sorry. So this went up here, took out this high, immediate weakness, this sell-off. Mm-hmm. Now, this, to me, 117 is an extremely critical level because, and not even know, if this starts trading below here and then pops back up, then falls back below, this is my trigger to short. Just based on this level being like an inflection point, like a pivot point that's there, and your emotions of going up and above. So, how much further does this go? Oh, okay, all right, we're here. So if this
really funny about your drawing,
what's that?
If you go to the CoinGlass Bitcoin liquidity heat map, there is only one area of shorts that could be liquidated that would be profitable for market makers in Wales, and it is right at $120,000. Which is exactly where you drew the top of that line. I saw you draw that, and I was like, how the hell did I was like, I know he doesn't look at the CoinGlass Bitcoin liquidity heat map.
No. So this is good now. So thank you for that so I'm gonna call that confluence. That's confluence now. So to me, if this right now, I would love to see it move back up here to that 120. And then if there's weakness coming back down and falls below this, I would be a shorter of the Bitcoin. In not talking about, I don't care about targets for the downside. Figure that out later. But that's, to me, kind of looking at where I would look to you.
But if it holds that 117, then you have a potential opportunity. If Bitcoin's above 117, hey, we're great. If it's below 117,
that's it.
Yeah, that's really
how I would play it, 100%. And the longer it stays up here, so if it does this and like chills here, it would need to do that to some consolidation here, some sideways price action to move up. But I could just because of this was nasty. This rejection was very nasty after taking out the highs from July 14th. A
lot of bearish momentum.
Right, that was it. So right now it needs a lot to recover. So I could expect a fake out. I could expect a bull trap up here. I'd be looking for that. But also watching for it not to happen. So like I'll end with this. I'm not going in here saying like, hey, I think this is going to happen. I'm saying if this does happen, that would be a scenario for me to be interested in a short. And if it doesn't, then I'll move on to the next kind of scenario.
Yeah, but you have to ask yourself the question too. If we get a rally up to that 120K, you're like, why does that happen? Probably happens because Jerome Powell says something positive at Jackson Hole, or we have a rally up until like throughout this week to 120K right before his speech happens. We don't exactly hear what we want to hear. 117 doesn't hold.
When I was actively trading big markets, like beginning of this year, last year, for the most part, I was looking forward to FOMC days and any days where there was something, because although, by the way, do not trade on those days. I, after many times, started getting better at it, but it was more on the post. Like, let it do what it's going to do. Like, because it's gonna do wild price action to the upside, downside, liquidized shorts, and your longs, and then observe what happens next. Trying to position yourself prior, do not do it. Especially do not use leverage. Like, there's no reason to do it. Like, if you will have an opportunity to get long or to get short based on what happens after. It's not like you have to race to be there. I think that's where the FOMO piece becomes critical. So stay away from those high volatility events, and you'll be better off.
Yep. Now, I think we have a request here to take a look at Ethereum.
ETH.
Yeah. Let's pop good old ETH.
Oh, you know what I did before with ETH? I'm gonna show you this. Hold on.
Because I still have a pretty strong and bullish opinion of ETH, even if it goes down to just below $4,000.
Where is my? I'm not going to find it. I give up. All right, going back to here.
Actually, do that. I'm going to pull up Ethereum's futures chart. See what.
This is a tweet that I misspelled, but I left it. Is this where? Is there? Is this where everyone and their mother top last ETH? Yep. That was it. By the way, great feature on TradingView. If you take any tweet and just do a copy pasta, copy paste into just take the link, paste it in here, it plots it exactly where the tweet happened. It's a very, very nice feature.
That is nice.
Yeah, ETH looks great. I mean,
there's a bearish gap on Ethereum too. There's two bearish gaps. Oh, well, actually, there's three, but they're much further down. But give your unbiased opinion, and then I'll layer in some extra info for you.
Look at this. Oh, okay. We are above that 4,000. The longer we're above 4,000, the better. Right? This is a 3-day chart. This is where this was indication to long here. So honestly, if ETH does something like this and stays up here and goes sideways for a little bit into September, sheesh. Like, wow. I would
blast off.
Yeah. It just makes sense to me. Like, it's almost like, that's why right now I think we may also too, when I say we may have the next couple of weeks maybe not so great, I could also be chop. It also could be go sideways, which is not a bad thing right now. But the longer we stay up here, honestly, we want to go sideways. You want to just, hey, prove to me, ETH, that you can hang out above 4K for a long time, and then let's level up. But this chart was great.
Yeah, and I also saw the question here from Magic. How can you tell where the bearish gaps are? Let me show you that, and I'll show you. We'll pull up the whole thing. Sharing my screen right now, Doug. So taking control. My hands are on the wheel. So here's Ethereum on the daily time frame. Now, if you are on TradingView and you want to find a chart that has the gaps on it, go over here, type in ETH, and it's usually always in like the top 10. And here it is, ETH futures on the CME. The CME is the Chicago Mercantile Exchange. It is the largest futures market in the world, so it's the only one worth paying attention to. So we come here, and this is the daily chart for Ethereum. And we can see that there is a gap right here that started on August 8th to the 11th. So it's because ETH rallied over the weekend. And
big hole. Just a big hole.
It's a big hole, and it closes down at $4,098. Okay, so keep that in mind. Basically, $4,100. Now, if I come over, also the 21-day exponential moving average is coming up close to it as well. Now, the spot chart and the futures chart are different. Literally a gap. Yes, it is literally a big old hole, Magic. Now, if I come over to Ethereum here, and I'm just going to zoom out a little bit just to show you all the magnificence of what Ethereum looks like, and I'm going to come to the weekly chart here. Oh, I made it all gross. We have this massive consolidation triangle that we just broke out of 3 weeks ago. And if we come down to 3,000, and if we were to fall like a rock right now to $3,944 and bounce off of that, that would be a confirmation of the breakout of this pattern that wants to send Ethereum to, and I always say it's above $7,600 because I forget the exact number, but it's kind of crazy. Measure this at its thickest point, put it on top of the breakout zone, and it is $7,836. That would probably take over the course of several months, but still pretty sweet. And if we come to the daily chart, we can also see that there is a nice solid wick here of support lining up with that magenta line. And as the weeks go by, the 55-day exponential moving average could come up as well. So this could just be chopped. Ethereum can go down to $3,950, which is well below $4,100, which is where that gap is. Close that gap, maintain a bullish close, and then Ethereum, you long the shit out of that. It's not financial advice.
Not financial advice. Yeah, I was gonna say that was pretty.
Not financial advice. So that's what we're looking at.
All right, you want to do some charts here because I got to go in a little bit. I got a long day.
What other charts can I have gripped your mind?
Actually, let's look gold. I went to gold. All right, gold is still in this range. So.
Oh, by the way, if there's peace in Ukraine, expect store values to take a hit. Expect gold to take a little bit of a dip. Expect the dollar to take a bit of a dip as well. How that affects Bitcoin, typically the dollar going down is good, but gold going down is typically bad. So we'll see what happens for Bitcoin.
So this has been still going sideways, right? I'm waiting for a breakout up here or down here. Gold is such an interesting trade, honestly. I love this shape. This is a 12-hour chart. We're on a 12-hour now because I like that. I'm going to get rid of this to not distract. I'm going to just pull this over a little further here, extend this range. I love the falling wedge. It's one of my favorite patterns, especially.
Descending wedges are so good; they always break to the upside.
It's one of those. So gold right here, like this is like textbook. Oh my goodness.
That.
I don't like RSI that much. The RSI looks a little sad. It's a little tired down here.
It's neutral and waning.
Yeah. Still could even get another.
It almost always breaks to the upside.
Like this. Look at this. I like the big move down, like the big, like not that big, but like just a little bit down here. It's like up and a fake out. Then this pullback. This is the Giga long spot. Also too, when I was actively trading a lot, it was more on looking for trading what you see. I heard people say that, like I trade what I see. This is trading what you see, where it's more of waiting for an anticipation of a trigger and a confirmation. Like, I'm going to do this if this happens. If it does not, I'm not forcing anything. I don't care. Like I'm gonna let it fall over. So, but yeah, this is interesting. I'm not gonna start following gold because I haven't. But at the moment, if I zoom out, outside of that, it looks a little bearish, a little tired. And I keep seeing these highs here just going tapped. And I'm kind of seeing a little bit wants to like kind of roll over here. I would not be shocked if we got this pullback, but I still think gold is still bullish. I mean, it's still bullish. It's still bullish overall, but I think gold still has more left, even though there's many folks who argue it's a very overcrowded trade. I still think it's in the time of 2025, 2026 coming in. I think gold is still a choice by many investors.
Remember, the reasons why gold are growing up in value are still problems. The United States is still fiscally irresponsible because we're spending way too much money. No, because the grading of our bonds continue to be degraded, which means you run to flights of safety outside of the U.S. system with gold. Hey, Bitcoin. Hey. And at the same time, the dollar gets weak because it's beneficial to our manufacturing, which needs help because it's been shrinking 31 months out of the past 33 months. So our manufacturing sector does need. So gold goes up.
Makes sense.
Makes sense.
Yeah. Bullish on gold. Cautious right now, but bullish. Silver summer has been a great summer with silver. Silver chart at this point, I'm just enjoying it because, oh my goodness, this thing is just silly. I think this attempts all-time highs too in the next 6 months. Like this thing's silly.
I am a little concerned because its rise upwards is becoming exponential. If you draw that line from the bottom of 2023 and upwards, it can't keep that exponential growth upwards. It will bend under the pressure and then find a new higher low.
So the only reason I would say I would catch this only reason is because of this, and this is just nonsense. It just like this was stupid. That's why this chart to me. That's why it's almost like this.
Didn't know silver had that dog in it like that.
Yeah, it's like so. That's why this cooling off was like a decade, where it's like this is nonsense. This is too much, and that's why it cooled off for literally was 2000, like 13 years. 13 years of cool off, and now we're back here. I think I'm just guessing here $65-$70 is within a reasonable window at some point if this momentum continues, but I would agree 100% will in general. On normal circumstances, this looks overextended without me even pulling up RSI or any momentum, but it just is like it seems like you gotta chill at some point, even a lot like that, but I don't know.
Fair value guy says been buying silver, going to go up to $50. I think $50 is a good spot to potentially look to sell anywhere between 45 to 50, because then you have a double top potential scenario. You have a lot of people taking profits there. Fair value guy, I think you have a pretty good strategy with that.
Yo, it's Fair Value Gary, FVG, which
I forgot Gary, right.
Gary is very in sync with my thoughts. We're on the same page there most of the time. We are in sync. Shout out to Fair Value Gary.
Yeah, he always has some good comments.
Whoa, coffee bounce.
After we do coffee, I feel like we have to take a look at cattle.
We do. Now we need some. I want to say it was a coffee. It looked like suey. No, it wasn't coffee. But this chart, look at this bounce here. Oh my goodness.
That's the impact that I was expecting tariffs to have.
Yeah. Huh.
It didn't even come down to that zone.
No, it didn't. And then you got this. So now this is.
What was the time range on that?
This is 2 years here.
No, more to the right. Like the last consolidation zone it had.
This is 2025. Is this February up here? This is down.
Nope. This is. Yep. The higher low. Yes.
Here.
Yeah. What's the date range on that?
Where's my little can't see my phone to the way. Here it is.
I mean, put your cursor over it. I will.
50 days. It's called 2 months.
Yeah. When did it start though? June. So let's see.
June 30th. Let's call it July 1st.
Actually start that affected coffee. Because for those of you who don't know, coffee is only made along that, basically right along the equator. So every single one of those countries got hit with a 15% tariff minimal. When did that go live? It was right around that time frame. So maybe the impact of tariffs was enough to stop it from going lower down, finding support where it should have normally found support, that consolidation zone that you have grayed out on your chart. Graded that consolidation zone, and then prices started to go up. Especially because like a lot of the big coffee organizations, like your Starbucks and your Dunkin', will buy a ton of coffee and store it, which is one of the reasons why in America, we have a lot of moldy coffee that they turn. Also, this is true about the coffee industry as well, that a lot of people don't tell you about. A lot of the beans in America come from countries who refuse to buy it because it showed up in port with mold, and their countries say, we won't buy your moldy product. And then so instead of throwing out those coffee beans, the coffee bean ships just turn around and sell them into America, because America will totally buy those moldy beans. So think about that next time you're drinking your Starbucks or your Dunkin'.
America!
America! Moldy beans! Gonna drink mold. Anyway, fun fact. Where were we? I got distracted.
Wait, I'm drinking mold?
Yeah, dude.
Oh, shit.
We're all drinking mold. You, me, Pablo down the street, he, she, we, wombo. The study of wombology. It's moldy beans, dog.
Oh, damn.
And this is what you guys come here for. It's these little tidbits of information.
Going to cattle.
Going to cattle.
Oh my god! Holy shit! Hold on, is this actually the chart?
Long beef.
This is live. This is live cattle cash. So I don't know if this is the proper
live cattle cash.
Are there any live cattle futures? LE.
I would go do live cattle futures.
That's same thing. All right, same thing. All right. Okay. This is
buy that beef.
Holy shit!
Boy, it's Beef.
How do you feel about the Arby's song? We have the meats. How do you feel about that?
We have the beef or the meats.
The meats.
It's always a saying that kind of grossed me out. And
Right.
then I will say though, like a month ago, I started seeing a lot of TikToks of people being like, "I'm tired of people shitting on Arby's. It's delicious." And everyone, then a bunch of like big people went to go try it, and they're like, "Shit, this is actually delicious." I was like, "Damn, I've been hating on Arby's for almost 33 years, and I've never been because it just seems gross."
Yeah, just like I'm judging Chad, the same thing. But it's like Chad could be a good guy, but he's just the judging factor. So, but it took you that long to go there. Like the jingle, I think the jingle needs a tweak. Just need to throw in a sheep maybe. It would help out a little bit. But
I use Arby's as my shame meal, says Mr. Robot.
Hey,
Robot Strictly.
Do what you got to do, man. Let's do it. This is insane. This is insane. Flip up here. You had one, two. This is 3 months. This is a monthly chart. A long beef here at $200. This is an insane chart.
It's pretty crazy. We should have been cattle and coffee, everyone.
By the way, I don't hate Arby's. I just it's the I've had Arby's years ago. Arby's is the food's great. No problem with Arby's. It's just the song. Like they're trying to bring new people in. Like we have the meats. Like yeah, like okay, yeah, I want to go to Arby's right now. I don't know. No.
I've never had it before in a day in my life. Never before in my life have I had Arby's, but I want to try it now. I had one of my buddies also tell me that like their turkey sandwich is one of the best sandwiches in all of fast food. I was like, damn, dog.
Are there other turkey sandwiches in fast food besides like a Perkins? Like where else were you getting turkey sandwiches?
Best fast food sandwich. Like
fast food sandwich.
Like in general.
That's a pretty bold statement. I don't know.
Bold statement, and his palate is terrible, but you know, a high and mighty claim that I need to back up with my own personal data.
Wow. All right, let's do this. I'm hungry, but I'm not. We're gonna look at Link because Stinky has been just, oh my goodness, this thing.
Because you're hungry?
No. So Chainlink is one of those, like earlier. This thing's been popping off, and this was the best spot. I love the breaking of the downtrend here. This didn't even give us. This is a daily chart. This thing just leveled up. The only opportunity for a long here, if you were following this, is actually here. This would have been, you couldn't chase this. This is still very strong. Now I really want Link to get back to $40, $45 so I can exit my position from 2021 when I bought it when Elon was on SNL and then everything crashed. But I get a little weary, even though I love the Chainlink, and shout out to the Marines. I get a little weary when the dynos pump, like very strong. Now Link has to move at some point. It's nice, but I'm just a little cautious. Like I would much rather Link to pull back here and then do this instead of trying to do this right now, because this looks unhealthy. If this does this, very unhealthy. I would short everything, and not financial advice. So it shouldn't do that. This should cool off now. I think this would be a great entry in your 20, even a little lower, maybe, like a little 19-ish, and then continuation up. But Link is performing very, very well right now.
Hey, Jim, it's looking nice.
Any other question here? What do we got?
Take one more coin because I know you got to run.
Yeah.
And we'll do final thoughts. We'll do COTI.
COTI. Oh my gosh. COTI.
Which is a coin I haven't thought about in a long time.
Oh, got a little drawing here. What was it? Last time I drew this was on November 2024.
I'll pull up my chart too, see if there's any other insight we can pull up.
So I mean, like it's one of those kind of dino coins where it's like it's just a little sad. I mean, it's not like it's not bad.
It's a little sad.
It's a lot sad. I'm trying to be nice here. You want to see strength. Like I can't. You do not want this losing this level here. What's this? Like 5 cents. Do not want to be below 5 cents. I'm sorry, take that back. You don't want to have daily closes below 5 cents. If this does one of these and comes back up here, this is nice. This is nice, but this doesn't look great right now. And you want to be looking for, if I go over here, this is the last time it pumped in 2024. See these beautiful thick green candles that are stacked on top of each other? This is when you want to see strength. You want to buy strength. And this is why, for me personally, again, I don't like dollar cost averaging, because into markets like a dino coin that looks like this, no offense to COTI, but this could just go sideways for for the rest of the year. Like, so there's no, I want to see strength. Prove to me that you're able to break this downtrend, which has been since she's like March 2024 and really from December 2024, and get back up to some level here. And then to me, this is a good opportunity to long. But otherwise, I would be in this only if you were following the project and you bullish on the team, things that are out there. But outside of that, I can't see anything right now that's jumping out saying, hey, I like this.
Mm-hmm. And if I take a look at it, which I have, I'll say one good thing about COTI that it has going for it. This is the weekly chart for COTI so we're going all the way back to 2019 when this coin came out. And I typically don't like to dive into coins that don't have any momentum going for it right now. And here we don't see a healthy coin. We don't see a coin's ability to go upwards and hold a higher level, a higher low, even if it's barely one, and then continue to move upwards. We see a coin that will pump and then fail and go back down to its lows. Now, where it is currently is, if you can look at my dotted line, is it made a low pretty much right along with the lows that it had set back in 2023. So we're kind of trying to find support on the previous bottom here, which is a potentially good sign, even though it does have a little bit lower to go. The other thing that is potentially something to keep your eyes on is the Moxie indicator down here, because it might be trying to work its way upwards again on the weekly time frame over the next maybe 2 months and try to actually get a long signal. Because the last time you got a long signal right here, you had a pretty big blast off for COTI from 5 cents up to 27 cents, right? So maybe there's something cooking there, but we don't have any higher low. And, like Doug said, we don't see any confirmed strength, but maybe it's finding its bottom again at about 3.6 cents. Let's see, what was the bottom here? Yeah, 3.5 cents. So maybe it can fall, except that's a pretty big fall. It's a fall of like an additional 30% still. And if we zoom in on the weekly time frame, you can see we're still getting shoved back down by the 21-week and the 12-week exponential moving average. There's zero strength on this chart right now. It hasn't gotten above any areas of support at this current point in time. So that's what we're currently looking at for COTI. With that, Doug, final thoughts. Oh, I have a final thought, and it's a little bit of a commercial as well.
Go for it.
We talked about drawing like chart art. If you all follow me on Twitter, or you follow me on TikTok or Instagram, on the Rise Up Morning Show's Instagram, you'll have seen my chart art of the woolly mammoth and the Chinese dragon pattern on Bitcoin's chart, which, if you didn't see the video, I just took a pen and started drawing what I saw, which was a woolly mammoth and a dragon fighting, and then talked about how people were stupid that they didn't see this clear, obvious technical analysis pattern, and went on a riff, right? I decided to use that as inspiration to host a competition where I will be giving away $100 in USDC to one lucky winner. You can submit your silly chart art on whatever asset that you want. It doesn't matter. Rules are you have to draw something silly and fun based on the patterns that you see on the chart and submit it through the Rise Up Morning Show community, which you can find at rumshq.com. That is RUMS, Rise Up Morning Show, HQ, headquartered, rumshq.com. Or if you're watching this on Instagram, click the link on the profile page. Or if you're watching this on TikTok, click the link on my profile page. Go to the Rise Up community, create a profile, go into the forum where you will find Will's Silly TA Chart $100 giveaway. Thursday morning on the Rise Up Morning Show. If you're watching this on TikTok, it'll be streamed on Evan's profile page, Conversation with Evans, or you can find us on YouTube, Twitter, Twitch, Instagram, Facebook, LinkedIn. Type up the Rise Up Morning Show. You'll get us. And we're going to just start showing off. It'll be our initial reaction to these silly charts. We will pick the one that made us laugh the hardest, and I will give you $100 in DC. There you go.
I love it.
Yeah.
You should, so go back 2022, 2023. I used to print out used to print out charts, and I would color them with colored pencils, and I would then use that to find repeated patterns. And Ondo was one of the ones I was looking at. It was 20 to 40 cents. Actually, I was gonna frame the picture. My girlfriend wouldn't let me. She wouldn't like that. But like, you can see if you, and the reason I'm telling you this is that you could see a lot about a market if you just take away what it is, like who cares what the name of the ticker is or what you're looking at, and just look at it for a little bit. You start seeing things. I'm not saying it's going to give you like the answer, like where things are going to go, but it just gives you perspective. And I highly recommend doing that once in a while and not staring at the 30-second chart, 15-second chart, but I'm a hypocrite, by the way, because I have been staring at those low time frame charts because they're fun. So my thoughts here, I would say we've had a nice period so far. And I've already seen this happen, unfortunately, a lot in the last 24 hours. I've already heard some horror stories where, hey, I killed it all last week. Things were great. And then in the last 12 hours, I lost it all. So it's okay to stop for a little bit. I know it's very difficult. The trading part gets addicting, and it's like you're doing well. It's like you're feeling the flow. I'm saying like, hey, it's cool to basically have a 30-second break. Sorry, 30. Take a day off, go touch grass, go do the things, and walk away from the charts, and that'll clear your mind, and then come back. It's not going anywhere. Crypto's great. It's 24/7. That's it.
Mm-hmm. Yeah, well said, man. And I don't have any other final thoughts except for excited to see what you guys drop in the silly chart competition.
I love it. I love the competition.
And also, when you're in profits, guys, you sell a little bit. Most of us don't have the time. I barely have the time. In fact, I need to probably simplify my selling strategy and do a little bit more of what Alex does. Just sell a little bit when it's green and buy a little bit when it's red, and don't think anymore past that, because I'm spread a little bit too thin across all the jobs that I have. Granted, it's just 2 jobs, but I'm sucking more and more time into it. I'm putting more and more time into it. It's sucking time out of me. There's whatever. There's sucking going on, and I don't like it, apparently. Which is weird. It's usually good. Anyway, we're going to end the show there, ladies and gentlemen. Thank you for coming to another episode of Market Watch. We will be live again next Monday at 8 p.m. Eastern Standard Time. Myself and Doug. I am also working on scheduling another night session for folks to have a panel discussion with people who work in crypto, how they got into it, what the work is like, and to help people understand how you too can get a job in cryptocurrency, as well as putting together a panel with 3 venture capitalists. And I'll field questions from our community, and we'll have a discussion with them about what it's like to be a venture capitalist and what it's also like to be a venture capitalist for crypto companies, what they look for in crypto companies before they give them money, all that stuff as well. We're working on getting those scheduled over the next 2 or 3 weeks or so. So looking for some really fun things to come as well. And in the meantime, the Rise Up Morning Show will be airing tomorrow with myself, Evan, Alex, and I believe we have 2 guests as well. Tomorrow at 8 a.m. Eastern Standard Time. So we'll see you all there. Thank you very much for your time. Have a good night. Do good things. Be good people. Make a bunch of money. See y'all later.